Welcome to another video. Today, as promised, I will talk a bit, and maybe I think it's the first time I publicly talk about it. So today I talk about how I developed my strategy, or to be more precise, how I developed the strategy that my bot is now using. First, of course, as the usual disclaimer, this is about my strategy, which works for me. It doesn't mean, or it likely won't work for you. I'm just showing you this because people wanted to know it and said that that's the most important thing or most interesting thing for them. And I think it might be interesting to get a bit of insight how I developed the strategy and what I looked at and what it means for me. It doesn't mean that this is working for you. This is not a use this strategy and get rich. You likely lose all your money if you use this strategy. So no financial advice, and always understand the risks of trading and everything before you do anything. So better don't do it. Just watch the video, think it's funny, and then do something else. Now, about the strategy. As I said in the other videos, main thing to find your strategy is screen time. But with a big but, because many people, or especially beginners, quickly jump to this, screen time, I watch the charts, I jump into positions in and out. No, better spend a lot of time watching the charts, analyzing the data, finding patterns, see stuff, maybe backtest and everything, but try to not overtrade, because over time you will learn it anyway, because in the beginning you likely overtrade and then lose a lot. So I did that in the beginning, but that's not how I developed my strategy. I developed and found the strategy by watching a lot of charts, analyzing a lot of charts, and finding what works for me. A few things that I learned quickly without any bigger strategy and anything, just by trying out stuff, because that's also something in the beginning you have to try out stuff. Start with a really small account, with a really small risk reference, do small positions where you try out stuff and see how you react to it. Try out momentum trades, try out breakouts, reversals, whatever. If you think, that sounds interesting, that's a strategy or a trigger or an indicator that could work for me, try it out and decide for yourself on the actual trades if it works for you, but spend most of the time analyzing the stuff. What I learned quickly about myself and for me is that I'm more the trend following guy and not so much a scalper, or any reversal or anything. So I like to let my winners run. I really hate it if I do a position, take profit after a few hour profit, take the profit and then see the position make another 2x or another 3x, and I missed it basically. So I really hate that. I don't want to see that. So I am really more the trend following guy to say, okay, into a position, let it run. If it runs positive, let it run. Trail the stop and everything. On the other hand, of course, it's always both sides. I also hate to have a drawdown of a few months. That's what basically was a bit of a problem in the beginning. What hit me emotionally with the trading and everything, but that's a story from the other videos, which is also for trend followers. So that's also something important to understand about your system, to get the parameters and understand what it means. 3 months drawdown sounds interesting on paper and is really hard in real life if you have 3 months of just down and no recovery. So that's something to keep in mind if you do that stuff. But for me, I decided I like trend following. I want to let my winners run. So I go more into that direction. And whatever type of strategy you use, you always have to answer basically 3 questions, in my opinion, to have the basis of your trading system or of your strategy. And that's when to enter a position, what position size to use, and when to exit the position. So an entry criteria, the position size, and the exit criteria. This is now not no trade of my strategy or anything, but just for visualization. If you say, okay, you have your entry in the beginning, when you do the entry, you have to decide how big the position is. I always also recommend to have, as soon as you start the position, or even before you open the position, have initial stop loss. Yes, the exit criteria can be something else, not price dependent, can be based on an indicator, can be on sentiment, whatever, it really doesn't matter. But you have an exit criteria. But in the beginning, I would recommend, when you start your journey on trading and everything, I really recommend to have an initial stop loss on a price level. Could be a worst case stop loss, where say you usually always close the position earlier, but have that to have your risk parameters solid, because otherwise you risk, especially in the beginning, open the trade, it runs against you. You want to wait, want to give it another chance and stuff like that, and then suddenly you lose far more than your whole risk parameters defined, and then your whole risk strategy, your whole risk management is out the window, and you lose more and maybe blow up your account on the first trade, which is not how you learn trading. I mean, how you learn trading, but not how you should do it. So always have an initial stop loss. Then you might trail the stop, have a trailing stop that follows the trade, and you might have a take profit where you close the position at any point. And that's, if you have those questions answered, if you have the decision, when will I enter a position, how big will it be, and how do I exit the position again, if you have that answered, your strategy is defined. So how did I define it, or what's my strategy? On the one hand, take profit. I experimented with it in the beginning, but as I said, I'm more the trend following guy and don't want to cut winners short, so I didn't use or don't use take profit for that strategy. Initial stop loss, yes, I will come to the exact entry trigger, and which also defines the stop loss, initial stop loss, in a minute, because that's the more complicated, is a wrong term, but the stuff where we can talk about it a bit more. So entry and initial stop loss we talk in the next slide. Position size was quite easy in my case, because in the beginning and in over the first time, I kept the position size just at 1R. So I always have 1R is 1% in my scenarios everywhere, and so it's basically I risk 1% of the portfolio on each trade. And since I have an entry level and initial stop loss, the calculation of the position size is super easy, because if it goes that way, you lose exactly 1%, so you can exactly define the position size. And for the usual exit, or for the exit in a profit case, I use a trailing stop. For the strategy, have basically a parabolic trailing stop. It's the standard, it's basically an indicator from the calculation, but you calculate it on the position itself with the extreme points and everything. So it gives the trade space if it doesn't move, but as soon as it moves in a stronger way, has a momentum, it starts trailing stronger. And I added there, so I have that, and additionally I added a possibility for, I call it non-linear trailing stops, which is basically kind of the idea of a break even, where you say, okay, if the position makes a certain amount of profit, or is an open profit, so if it's, for example, 1R in profit, you could trail exactly to the entry position, so that you will not lose on this trade. Even if it goes completely back against you, you just get in at plus minus 0, which is, I call it non-linear, because if you have a threshold, it just suddenly jumps up, right? And I generalized that I said, okay, it's not only on a break even, but I can also do, if I go at 2R, I trail it to exactly 1 hour profit. So I have a minimum profit and stuff like that. That's just random numbers now, but to get the point across. And what I in the end did was combining this parabolic trailing stop with a few of such non-linear trailing steps, just to lock in profits if it goes strongly. And it's always the effective stop loss is always the highest, in a long case, the highest of the defined or active stops. So it's always going up, or in my, so for me, positively. So that's the basically all the exit strategy, that exit criteria that I have: initial trailing, non-linear stop losses, no take profit. Pretty straightforward, and no rocket science there. But yeah, don't be disappointed. The whole strategy is basically no rocket science. You might be disappointed in the next slide, but yeah. What's the entry trigger? Because that's the only thing that's left. Let's talk about the entry trigger. And as I said, nothing special there. It's basically a triangle breakout. How did I get to that? And how did I define that? And what was what? Again, as I said, a lot of screen time, a lot of watching the charts. And while watching the charts, for me, I started seeing the price ticker, the movement and everything, a bit like an it sounds weird to say living entity, but you get the feeling of it having some mind of its own, right? And a bit of the energy in the stuff. You feel the momentum when it has a lot of energy, or if it slows down and it's just flat, then there's low energy in the market. So basically, the chart as a representative of the overall energy all the market participants put in there right now, and what you have there. And with that, you can view this whole thing if you have a triangle basically, or a range that goes lower and tighter and tighter. It's basically the volatility as energy as it gets condensed and gets smaller and smaller. So kind of a compression on the volatility. And I always viewed that as saw it to say, okay, it gets compressed like a spring being coiled up and everything. And as soon as it breaks out, this stored up energy gets released and gives you the chance of a nice momentum. So that was basically my entry trigger, where I said, okay, if I break the triangle. But triangle doesn't mean both sides down, but could also be flat on the upside and then up. But it has to go at least flat or inside to the triangle. And there the problem started basically. Because manually you can say, okay, you draw a line, but as soon as you draw your line for the strategy, for the triangle, it's like, what do you do here, for example? Do you always go the biggest ones? Which one is the first spike to draw the line on? What points do you take? And even if you have your line defined, do you start or open the trade as soon as it breaks the line, or if it closes above the line and all that stuff? And for me, the first thing was this drawing of the line was already a problem if you do it in backtesting and everything, because there's a lot of manual input there, and gut feeling on how to draw it, how to exactly draw it, how to get exactly the points. And then on the automation, it's even harder to say what to use, because here you might say you draw the line here because this is just a fake out, and you draw the line like this, right? And how to do that in an automatic way. So what I came up with is basically that I said, okay, it actually doesn't need to be a triangle, a nice triangle or anything, a clear line or anything. What I want to see is that the volatility gets lower and goes into ranging smaller and smaller waves basically. So we have here a local high and here another local top, but this local top is below this local top. And also here we have a local low, and here again a local low. And for me, the entry, the energy starts to get released, so it breaks out of this pattern of contracting volatility basically, when this previous local top or low or bottom gets invalidated or gets broken. So I just decided to say, okay, if there is such a local top, this one is my level for the next one. And if I have, and it's of course it's confirmed if you have a high below it, and the low is confirmed as soon as you have a low above it. And here, as soon as I have two of them confirmed, I have a range, and I have my channel, and that's why I called it the QE channel in the indicator when I wrote it in PineScript. They are all open source and public on TradingView, so I will link also the strategy, a simple version of the strategy, or the first version that I did, say this way, the first version that I did of the strategy, I did in PineView for quick backtesting, and that's also public on TradingView, so you can play with that if you want. But yeah, that's basically what I did there, and it kind of looks like this. I said, okay, this is my channel, and as soon as both sides are confirmed, so I have a confirmed low and I have a confirmed high, local high, then I have a channel, and then that's the shaded area there. So here I have this channel, and basically the channel starts here, and here I would have a breakout because it goes through the channel, it breaks out of the channel. Here would be a long entry. And then it goes up and down, and here you see again, first this one gets confirmed again. The low is still confirmed from here because that's still a non-broken local low. Here we have a local high, so as soon as this confirms by this candle, you get the new channel where you have the shaded area. Again, a breakout of the channel. Interesting enough, you get next to bar you have a low confirmed, but now so the low moves up because this one is now the local low. But since this high was broken, you need to wait for a confirmed high again to get another channel, which happens here. And here you see this one is close, but not breaking the channel. So it gets confirmed as another low, which makes the channel a bit tighter here, but just a bit. And then it moves up, and here would be another long entry. So we would have here now 1, 2, 3 long positions open, which is pretty nice. Here again a confirmed channel, and immediately on the same bar it gets broken, so 4th long entry, and it moves nicely up in somewhere here. We might have the trading stop going up and closing here, so that would be already a pretty nice positive example for the strategy. And here you also see how during this channel it goes tighter, because here we have this low first, because that's exactly this example. First this one gets confirmed here. I mean, here we have already the first one confirmed here, but since there is no low, since the confirmation, since this is not confirmed, there is no channel anything. Because exactly what, it's also one thing, if there's a long, strong move, I said, okay, if there's a really strong move compared to the current volatility, it invalidates both, because basically this low is no longer relevant in this context, right? So that invalidates the stuff, and then you have to start new. And here you get the high, you get the low, now you have it confirmed, and it starts with the channel. Here, this one is another lower high, gets a lower local high, so gets confirmed here, tightens the channel a bit. Here we have a higher local low, which tightens the channel more, and then again the breakout, which starts the whole thing. And that's basically the strategy. So, or that's the entry trigger for the position entry, and for the initial stop loss. I always said, okay, basically my theory or my idea for the trade is invalidated when the other side of the channel is broken. So the initial stop loss is always exactly the other side of the channel. So every channel gives you a long entry on the upper bound with initial stop loss on the lower bound, and a short entry on the lower bound with initial stop loss on the upper bound. Easy to calculate position size from that, straightforward to look at, to decide, and everything. So that's what I came up with, then automated and did. And regarding this automation, this is a screenshot from the strategy. So this, I call it this channel strategy back then, which is the Python script on TradingView. I will link the TradingView strategy there because I published it 5 years ago or something. And here you see it was basically the same thing that we saw before. You would have the long entry here, the long entry here, the long entry here, then move up. And here I used a different exit still that's just going to the low after a strong move. But yeah, I switched on my Python script then to the parabolic, but I think this one is also implemented in the Python script, but over time I switched from that to the parabolic. But yeah, this would be exit here, so nice profit here. Here you see the same thing for the short. So there was a long before, it seems, which got invalidated, exited here, and here you have a short entry, moves along another channel, short entry, and short exit here when the came out. So here small loser, a winner, here a loss in another short, so plus minus. But that's basically the strategy. Yeah, if you have any questions, feel free to ask. Again, this is just to show how I developed the strategy. Doesn't mean that it works for you, likely it won't. Please don't use it if you don't understand how trading works. Yeah, well, don't use it at all, because yeah, make your own decisions and be responsible. With that, I will now start to implement the additional connectors for the APIs or for the completely different way of trading with decentralized trading, and we'll do some quick updates in the future on that coding. So sorry for all the non-coders. Next videos will likely be a bit more coding specific, but yeah, maybe it will be interesting. So with that, if you have any questions, feel free to ask. Otherwise, hopefully it gave you some value or insights on how I developed the strategy. And if you want to develop a strategy, good luck. If you still want this strategy, because as I said, there are bots or users who used my bot. If you still use it, please reach out. No one did. Sadly, sounds like no one is using it, but let's see. Yeah, with that, see you in the next video.